Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Monday, November 25th, 2013. Thank you all for tuning in. Let's jump right into the charts. We're going to start off with the usual S&P 500 E-mini futures. You're going to see that the futures are really just holding steady. They are definitely up a little bit from Friday's close. Right now I have the futures trading at 1807.5. So decent little uptick here in the futures. We'll see how this market does play out once the opening bell rings. But again, we're probably looking at lighter volume this week with the Thanksgiving Day holiday, also the start of Hanukkah, both on this Thursday, the 28th of November. So I think that traders will want to watch for that pretty closely, the light volume that is, throughout the remainder of the week. So I think we'll get some decent activity in the first couple of hours. But the reality of it is the volume trends have been very, very light starting even last week, and we shouldn't expect anything different this week going forward. Light volume does help keep the markets buoyant. We do get any kind of a sell-off or some kind of a pullback, most likely with the light volume. Once a good support level is found, the markets would stage a bounce. Now, last night in the Asian markets, it was a little bit of a mixed bag of tricks, but for the most part, you did have Japan trading higher by 1.5%, and that's on the back of a stronger dollar-yen chart. So again, the yen continues to fall, and that's pushing the Nikkei 225 up higher. But you do have the Shanghai Composite down about 0.5% last night, and that is mainland China. So that is a little bit on the weaker side. It looks like in India, it looks like the Bombay Sensex Index was higher by about 2%. So watch Indian ADRs today. They could be somewhat strong if the U.S. markets are strong. That is pretty important. I think stocks like Tata Motors are all decent Indian ADRs that you could watch for. Infosys, ticker symbol INFY, is another one. So again, these equities may do pretty well at the start of the opening bell as long as the U.S. markets are strong. If the U.S. markets are weak, then you could toss the Indian ADRs off the table because they're really not going to probably perform. But right now, with the U.S. markets being up before the opening bell, I think you should keep them on the radar. Going through my list here, there was an article in Barron's over the weekend about the cloud computing stocks, so you want to keep an eye on them, most notably Salesforce. You can see the stock down a little bit, but I don't think the stock is really going to fall very hard. So I watch for some levels. If the stock got down to around $52.10, 52 and a quarter, I would probably look for an intraday bounce around that level. So keep some of these cloud computing stocks. They're probably going to be a little bit volatile at the start of the day, and you can see Salesforce down a little bit, but it's not down all that much. And like I said, if it got down to around the 52 area, that's where you probably look for decent support intraday on Salesforce. I'm not even sure it will get that low, but if it does, that would be something to watch for. Some others would be Workday. That's holding up pretty well. CTXS, which is Citrix, this is holding up okay. Rackspace Systems, which is a hosting company using cloud computing technology. This has been a beaten down play, but this is also very, very oversold. So again, keep some of these cloud computing stocks on the radar. You may get some morning volatility out of that sector. Like I said, there's really not much I'm seeing in way of a morning trade on them. But Salesforce, if it did sell down to around 52, does look like a good intraday bounce level. And that could be around 52.10, 52.25. It's hard to pinpoint it to the penny. In further news today, we got some news coming out of Iran. It looks like the U.S. Will actually start to lift sanctions against Iran, and they're going to cut their uranium production, it seems like. So it looks like a deal was struck there. That is certainly hurting oil. Oil is lower today. Let me just give you the exact quote. Right now, light sweet crude is down $1.21 to $93.62 a barrel. That is also bringing down Brent crude as well. But right now, if you take a look at the USO, which is a good proxy for oil, it's trading right at 33.50. I think there's still a lot of support here, 33.50, 33.40. I don't think this is going to change things. I think right now we're in the winter, start of the winter season. People will be using more energy for heating. Also, it's very, very cold up in the Northeast now, and also in the Midwest. And something else you got to realize is that we are coming into the holiday travel season. So there's going to be a lot of airplane flying, a lot of driving, and rarely does oil fall all that much ahead of that. So again, while you're hearing the headline that problems in Iran are over, they're going to start pumping oil and things like that. They're an OPEC nation, and the reality of it is that we're into a point in time, cyclically, where countries will use higher energy demand will go up right now. So that's what you have to watch for. So I really don't expect oil to really fall all that much, at least at the moment. Now, gold, on the other hand, is getting shellacked, and I'll show you why. Gold is down again today by another $13, and here's really the main culprit, the U.S. dollar index. So the U.S. dollar index trading higher on the session, pulling back a little bit. It's up around the 81 level. I would say it's up around 23 cents. And again, the stronger dollar yen. So when you see the dollar yen make a move higher, and then you can see how it did that overnight, that is going to be a negative for gold, and that's why we're seeing gold down about $13. But again, we're going to watch gold very, very closely here over the next couple of weeks. There's some interesting patterns that are forming there. There's no real reason to own it at the moment, but if these patterns form, you will want to know about it, and you will want to get in on a gold trade. So we'll watch that closely. But right now, if we take a look at the GLD this morning, you're going to see that the GLD is trading around 118.83. It closed at 119.92. So pretty weak showing for the GLD overall. You can see that pretty nice gap down there. And again, I'm just not seeing any real reason to step in front of gold at the moment. But there are some interesting patterns developing on the bigger time frame that one should know about, and it could make some money. So, but that's still down the road a little bit. In the short run, gold is weak today, and that really is all that matters at the moment. I think we covered everything. It's a little bit of a quieter Monday. I don't really have a lot of stocks in motion. I think we have only 2 gap plays this morning. They'll be posted up in the chat room at around 9 o'clock in the morning. There will be economic data out, I believe, at 10 o'clock. So 10 and 10:30, I believe we have the pending home sales for October. That's out at 10 o'clock. And also I think there's the Dallas Fed's manufacturing survey, and I think that's out at 10:30 if I'm not mistaken. But again, the market really doesn't seem to care or worry about any reports, just worries that, hey, central banks around the world are printing money, and that's all that matters. And that's all we should care about too, because that's what's making money right now. So again, watch the charts. Let's do what the charts tell us to do, and we'll pretty much leave it at that. I want to wish you all a great trading day. Hope you had a great weekend, and I will see you on the charts.